Today, we're diving into the wisdom of one of investing's all-time greats, Benjamin Graham. We're going to distill his masterwork into something we can all use, a powerful, unbreakable framework called the Intelligent Investor's Code. You see, markets are always changing, but this code, it's designed to be permanent. And it all starts with a piece of advice that's, well, it's pretty tough to hear. Right out of the gate, Graham hits us with this hard truth. The biggest, most dangerous threat to your financial success isn't a market crash or a bad economy. Nope, it's you. It's the person staring back from the mirror. It's a sobering thought for sure, but getting your head around this is the absolute first step to actually mastering the game of investing.
So that leads to the big question, right? If we are our own worst enemy, then what's our defense? How do you build a fortress around your portfolio that can actually protect it from your own worst impulses? The fear, the greed, the panic. To build that fortress, we first have to really understand the threat. And the thing is, the threat isn't out there. It's the internal enemy that every single one of us has to face when our money is on the line. Just think about that for a second. Market crashes, they come and go. They're temporary. But the money that gets wiped out because of overconfidence when things are good, or pure gut-wrenching panic when they're bad, that loss can be permanent. It's our own behavior, our fear, our ego, our need to follow the crowd that truly destroys wealth. Okay, so if our emotions are the problem, the solution has to be something that works even when those emotions are screaming at us to do the exact wrong thing. And that's where we get to this core idea, an unbreakable investor's code. And this is the key. The code is not a list of hot stock tips or market predictions. It's better to think of it as a behavioral operating system. It's the permanent framework you fall back on when you're stressed out, confused, or even feeling way too confident. It's literally designed to work best precisely when you are at your worst. So what's this code actually made of? Let's break it down. Let's look at the foundational pillars that have guided some of the world's most successful investors for decades. Pillar number one, you have to know what game you're playing. An investment is based on solid analysis, protecting your initial capital, and getting an adequate return. Speculation, that's a bet. Now, Graham's point wasn't that speculation is evil. His point was that confusing speculation for investment is probably the single fastest way to financial ruin. Next up, we meet one of the greatest ideas in all of finance, Mr. Market. Imagine the stock market is your business partner, but he's got wild mood swings. Some days he's ecstatic and offers to buy your shares for crazy high prices. Other days he's terrified and offers to sell you his shares for pennies on the dollar. The key is to remember he's there to serve you with opportunities, not to tell you what your assets are actually worth. You are always free to just ignore him. And deciding when to deal with Mr. Market, well, that starts with knowing yourself. Are you a defensive investor who really just wants simplicity and safety? Or are you an enterprising investor who's willing to put in the serious work of deep analysis? Both paths are totally fine. The real danger is thinking you're the enterprising type when you only have the time and temperament to be defensive. This leads to a critical rule. Your system has to be stronger than your willpower. Because trust me, your willpower will completely abandon you in a panic. But a predefined system, like simple rules for how you allocate your assets, that won't fail. A decision you make calmly, way in advance, will always, always be better than one you make in the heat of the moment. You've got to trust your system, not your mood. Okay, if you only remember one single thing from this entire explainer, please let it be this: the margin of safety. It is the absolute bedrock of intelligent investing. It's simply the gap between the real, intrinsic value of a business and the price you actually pay for it. It's your cushion, it's your buffer against bad luck, mistakes, and all the craziness of the world. In this margin of safety, it isn't just one thing. It's more like a multi-layered defense system. You build it into the price you pay for sure, but you also find it in the financial strength of the companies you own, in the diversification of your entire portfolio, and maybe most importantly, in your own disciplined behavior. And this is why it matters so much. Look, we can't predict the future, we can't get rid of uncertainty, but with a big enough margin of safety, we don't have to. It's how we build a portfolio that is designed to survive a future that we can't possibly forecast. In a world that constantly tries to sell us on sophistication, Graham's work is this powerful reminder that simplicity is a huge advantage. Complexity just hides risk and feeds our ego. A simple, low-cost, easy-to-understand strategy is way more likely to survive and succeed over the long haul.
And all this leads to a really simple but powerful truth. Just forget about trying to time the market. It's a fool's errand. The real magic happens with the power of compounding, and that requires patience. Your goal isn't to be busy, it's to stay invested. Because time, not timing, is the real engine of creating wealth.
So, after following all these rules, what's the actual payoff? What does this code really promise you? Well, it's probably not what you're thinking. Yeah, let's be crystal clear about what this is not. This is not a get-rich-quick scheme. It will not guarantee that you're going to outperform everybody else every single year. If that's what you're looking for, this is the wrong place. Here's the first part of the real promise, and honestly, it's the most important one. Before you can even think about winning, you have to make sure you don't lose. This code is designed, first and foremost, for survival, for making sure your capital is preserved so you can stay in the game. The second promise is that you'll grow your money steadily, reasonably, over the long haul. It's all about letting the power of compounding work its quiet magic, without the destructive interruptions caused by your own emotional mistakes. And finally, we have what might be the hardest promise to actually keep. It's a promise that you will have the psychological strength to ride out the storms and simply stay in the game. Because real wealth isn't built by people who jump in and out. It's built by the people who stay. Avoiding ruin, compounding your money rationally, and staying invested for the long run. In a world that is just full of chaos and hype, that is more than enough. So, I'll leave you with just one final thought to chew on. Think about these pillars we talked about: knowing yourself, demanding a margin of safety, trusting a system instead of your fleeting moods, and letting time do the heavy lifting. What if that isn't just a strategy for the stock market? What if it's actually a blueprint for making better decisions in every part of your life?